Hello, I am thrilled to welcome back Anton Golub, CEO at Swiss-based market makers FlowTech. Welcome back, Anton. Good to see you.
Thanks a lot, Paul, for welcoming me. Wishing all the best to you and your audience in 2021 to new and more all-time highs. And it's going to be an exciting year for everyone, I'm sure of that.
Well, let us see. Maybe we're going to discuss that shortly. Incredible start to the year, first couple of weeks. I don't think we need to remind anyone of that. The froth has come off a little bit, even though we saw Ethereum actually scrape a new all-time high, which it hadn't made itself, even with the Bitcoin rally until this week. But again, it kind of paused there, potential double tops in. We'll see what happens. So what are you thinking? What are your thoughts on that? I mean, is this a correction? Is this something longer term? What are we looking at?
So first, I couldn't be more excited actually that we are hitting those all-time highs. In terms of a bit of an assessment of that, I think that the price went way ahead of where the industry is and where the infrastructure is, where the technology is. There's so much demand for digital assets, for cryptocurrencies, that it kind of ran up very fast. Yeah. Now, in terms of the corrections, you and I have been around for a long, long time. So we actually know this is just business as usual. So this kind of corrections, 30, 40%, they're actually normal part of an overall bigger trend. So if I have to kind of put my name out, I think this is just a normal correction. There's a really, really strong uptrend. I couldn't be more bullish. Of course, it won't be, the prices go up and down as well. And the more they go up, there's a more liquidity pressure that they move down as well. But I couldn't be more bullish. And this is just for crypto OGs. I think this is just a minor correction, actually. And personally, I couldn't be more bullish.
Okay, that's good news. That's good news for everyone. Let's see how that plays out. I guess one point, just looking slightly further ahead, and they say that history doesn't repeat, but it tends to rhyme. Next month, CME are going to be launching their Ethereum futures. If people were watching back in 2017, the day CME launched their Bitcoin futures marked the then all-time high. We then went into a 3-year bear market, or 3 years before we broke those highs again. Do you think that could repeat here, or do you just think the market's changed? That just happened to be timing at the end of a very long bull run. What's your thoughts on that?
Yeah, so indeed there was a bit of a coincidence, in my view, last time when we basically had a correction with the launch of the futures, at the CME. I don't think, in terms of overall my positioning where I see the price going, I actually think there will be no impact around that. I think in terms of why it's useful to have now futures on Ether is because my experience so far is that the hardest thing to do in terms of getting institutional investors on board is getting them from zero to Bitcoin, actually. But as soon as they get Bitcoin, they get their first allocation, they ask what's next to play with. And we have to have something for those institutional investors, and Ethereum is actually their next logical choice. So I think it's a great evolution and progress for our industry, but also for the wider finance industry. You might have heard today or the day before that BlackRock actually is now changing the prospectus and the term sheet for one of their funds that they can trade or invest into CME in futures, but it's obvious it's CME futures on Bitcoin, and there will be a great opportunity now for Ether futures to be added to that digital asset composition where they can trade. And I just hope, talking about history, doesn't repeat, not repeating, but rhyming. I think the timing of CBOE that delisted actually Bitcoin futures as they were tanking in 2018 was probably one of the flops of the traditional finance industry. And I hope we learn our lessons and that doesn't repeat again. And I'm actually sure it will not repeat. And we'll have more trading venues around the globe adding Bitcoin, Ether futures. Even I think Litecoin could be the next obvious thing, and it's going to be very, very exciting for all of us.
Yeah, absolutely. I tend to agree with you there. I guess just looking at the headwinds, as you said, brought up BlackRock. They didn't specifically state any investment strategies, but a change to their mandate. So they'll be open and free to trade that as and when they choose to. And over the last few weeks, I know before Christmas and after Christmas, we had sort of not necessarily completely competing stories, but on one hand, you had the US Treasury put out a consultation around whether they were going to allow non-custodial wallets to continue not being KYC'd. I saw this week that they've actually pulled that. There was a huge response from the industry and a successful response from the industry. Yep. So it's great to see that on pause. On the other side, we saw the US OCC permit banks in the US to use public networks for clearing and settlement. So that's very positive as well. So you've got regulators on one hand. I think generally we've seen them be quite positive and supportive. Yes, they need to kind of put checks and balances in place where they need to, but they're generally being such supportive. Now with central banks, maybe less positive. We've seen, in the last couple of weeks alone, Christine Lagarde, I think last week, came out with, again, pulling the kind of familiar yarns that crypto's only used for money laundering and criminal activities, never really producing much evidence around it. And this week, Janet Yellen pretty much said the same. And if anyone was noticed, Chainalysis, the firm that does blockchain forensics and monitors the network, at the same time, they put out a report saying that, criminal activity has fallen again on the Bitcoin network down to something like 0.34%. And that's down from 2.1% in 2019. So, that is a significant trend. So it's, I guess anyone within the industry, and finds it rather annoying when these kind of allegations are just thrown out there. But do you think as Bitcoin and other crypto prices rise and we get into market caps of trillions, do you think this is going to be a narrative which continues and it's going to kind of, the higher it goes, the more concerns they're going to have?
Yeah. So I think you made a lot of very good points. And I think the first thing we need to do is actually not run away from that fact, So actually, of course, not good things happen within every industry, and our industry, no exception to that. And I think we are being done a favor by excellent companies like Chainalysis, who actually disprove this mantra that cryptocurrencies, digital assets are only or mostly being used for illegal activity, which is definitely not the case. And everybody who's been actually in the industry for quite some time, like you have been, know what kind of strong checks and balances are actually in place that this doesn't happen. And if I have to look ahead, I think this number of classified transactions that were used for illicit will just continue dropping, and will actually, in a positive way, beat the traditional industry very soon around that. My experience with talking to people that are high up in the monetary institutions is actually they're really big concern about the end client, the retail client, touching digital assets or cryptocurrencies. Why? Because in the traditional finance, no individual ever had direct access to actually currency. When you open your online banking account, those are not, credit Swiss francs. If I look at them on my bank account, those are not Swiss francs. Those are credit Swiss francs, meaning there's an entity in between actually that manages this wholesale currency system in the back, but the end user never touches it. Now, our industry and our work has actually brought a really big innovation that's for the first time ever possible. You own your own assets, and there is no intermediary in between. If I have to reflect on that, that would mean that I would have a bank account with the Swiss Central Bank, or you would actually have a bank account with the Bank of England, and there wouldn't be an intermediary with that. But that's not part of the plans of the monetary institutions, and they see more the digital assets, the cryptocurrencies, where you have regulated and selected intermediaries that operate these networks. I personally don't think that's the way to go forward. I don't think that's part of our DNA as an industry. But of course, I can also understand the point of the regulators and the monetary institutions who want to have that comfort and safety of the environment they have been used to for decades, if not centuries. So these are a bit of an input from my side.
No, very interesting. I guess just staying on maybe some of that regulatory side of things, or but also crossing over into the broader ecosystem. Saw a widely kind of circulated article that was published this week by someone, I'm not sure who, and I guess it's a story that's lingered for some time, but it seemed to raise a few concerns for maybe people that have kind of come into the space more recently, and this is around Tether, the stable coin, the US dollar, predominantly US dollar backed stable coin, which was the first of its kind, has been around a long time, and with it is kind of carried a little bit of I guess negative press around it, and perhaps for good reason over time. So yeah, the article was in essence suggesting that this is a huge risk in the system. There's been, which again has been publicly reported, they have an ongoing kind of a legal battle with the New York Attorney General over their operations. that's been dragging on, and then this story's come up again that Tether, there's this big systemic risk, and if Tether, if the plug was pulled on it, then the whole ecosystem could come crashing down. Do you think that's a valid argument?
Yeah, so I have read the same article like you had, and just to emphasize, a relative of mine actually sent me this article who doesn't even know a lot about Bitcoin and said, is the Bitcoin going to blow up because of that? And I thought, okay, if it comes from my relative, then there's definitely something who doesn't even understand well what I actually do. There's something off a bit here. Now, I think the confusion about Tether from the wider public actually just comes from the fact that they don't understand why Tether exists and why it's used. So Tether is really predominantly used by traders or even market makers, to actually emphasize it like that, who have a need of an ability to move assets very quickly between various digital asset exchanges, OTC marketplaces, and so on. So this is really why Tether is used. How can you fast move a dollar coin when you cannot do it with the traditional banking system? So if I want to move, dollars from a bank in Europe to a bank in US, and I'm a market maker, crypto market maker, it would take me 3 days, if not longer, But with Tether, I do it within extremely fast, actually. So this is actually why Tether is useful, why it's been growing so much, and why there's an appetite for it within our industry. Now, I think the controversy comes from why did Tether ever appear? And Tether, if you recall it, for quite a few years ago, was tied to first the fact that there were a couple of hacks related to a digital asset exchange, cryptocurrency exchange that's very close to Tether. Then also when they got their banking fiat gateway cut, they had to issue liabilities that were representing those assets that the clients had. And this was kind of the evolution why Tether appeared. So this might be the controversy, how it's backed, how it appeared, and just a lot of uncertainty and unknowns around it. But I think also in the context of an industry, that's a bit normal as well, because a lot of people ask me, why is Tether not audited? I tell them, well, practical experience, it's pretty much impossible to get an audit from a big 4 audit company for a stable coin, So I kind of emphasize, and this is just not how our industry works. And really to go back, I think a lot of this misunderstandings come from that people don't understand the market structure, which very much relates around trading, moving assets. And finally, no, Bitcoin will not collapse if there's anything happens with any stable coin, but in particular Tether. The opposite will happen, actually. If we have doubts about stable coins, what will people do? They will get out of them into something else and they will buy Bitcoin. So I'm not saying there will not be volatility and it will all go up, but actually the opposite will happen than what that particular article states.
I mean, you potentially see a big squeeze on the trading pairs that are against Tether because people were trying to get out of their Tether. So you could see that kind of spread open up. But I'm not sure I'd advise anyone to try and take advantage of that. But as you say, the big difference now is there's alternatives. Tether was solving a specific purpose and a need back then. But, we have other fiat-backed tokens. USDC has been gaining significant traction, supported by some leading companies in the industry, Circle and Coinbase in particular. And they are audited every month by Grant Thornton. So, it's again, part of a natural evolution. Tether, I guess, is still popular because it has so much liquidity in the market. And, you know full well as a trader, you want liquidity and you follow the liquidity. But I think there are alternatives there. I'm sure there would be hiccups. I'm sure there would be kind of a short-term, complications in the market, but I do think personally think it would blow over quite quickly. So hopefully if anyone's watching this and they had concerns over that, I do, this isn't any kind of trading advice, but I do think, the points we've made here are also valid as well. Okay, so well, let's move on now to maybe look at the broader market. We're at the beginning of the year. Obviously seen huge interest and price action at the start of the year. But last year's story, I guess, was all around DeFi. That created a lot of interest in the market last summer. The froth came off of that, but there's still lots of activity there. Still lots of interesting projects being developed or coming to the market. What's your view on that sector, and what do we need to look out for the year ahead?
Yeah. So I was very impressed actually what happened last year with DeFi in context and how it evolved, that it kind of like emerged pretty much I was quite surprised out of nowhere, and it kind of revolved around yield farming, which is very interesting. And then we had a really big takeoff of a lot of projects and also success stories. I really have to say, I mean, Uniswap is doing, today volume that's equivalent, I think, of 2% on what's happening at NASDAQ. I mean, this is highly, highly impressive. Yeah.
2%, you say? Wow.
Yeah. Yeah. So if I have to think about what would be the next step, let me try to be provocative. And I think the next success stories in the DeFi space will be the unnatural marriages, where you have actually the DeFi component and the CeFi component. So if I have to kind of label it in our language, I think that layer 2 solutions will actually be maybe a trend in this year in the context of DeFi space. So literally, we're going to have gateways actually that will maybe perhaps fully be Ethereum, will have a lot of actually close integration with Ethereum, with smart contracts, but actually where all the action happen, maybe trading will be fully centralized, yeah? So in that context, I think a lot of people told me when I stated that it's a very unnatural fit, but I think it addresses a lot of the problems that we have seen as the DeFi space has grown. I mean, everybody who has hands-on experience with decentralized applications knows that at the moment, blockchain doesn't scale. Now we're waiting for those improvements and releases, namely Ethereum 2.0, where those and sharding and a lot of other improvements that might relieve those pressures. But if you have first-hand experience, that this doesn't scale. So I think that's a very clever way how to actually circumvent or resolve the problem on non-scalability and just blockchain being slow as the ecosystem grows. And I think this unlikely marriage might be very interesting, going forward. There are a couple of interesting projects that do things around that. For instance, Vega protocol, I look forward, they're about to go launch soon to see those first test cases. But I think, if I have to be provocative, I'll go with the unnatural marriages or unnatural fits, and we see in a year how good I was with my prediction.
Yeah, no, I tend to agree. I definitely agree. It's kind of had those thoughts for some time that, I think there's too much overemphasis in the industry, perhaps, on decentralize everything. I always use the phrase that people are talking about trustless systems, but I think we're probably better off working towards systems that require less trust. And there can be that happy middle ground where, there's the trust or risk is distributed, control and custody is distributed. And I think these will be, interesting models that will be explored. So interesting you flagged that. And I look forward to seeing the developments in that space in particular. Anton, we've come to the end of our time this week, but we'll be getting you back on very soon. Thank you, as always, for coming on and sharing your insights, and we'll see you again next month.
Thanks very much, Paul. It was a pleasure, and I wish everyone to stay liquid and, looking forward to talking to you soon. Thank you.
Excellent. Thank you so much.